Do you sometimes pay in advance for inventory that you will receive in the future? Well, then you need to know how to record prepaid inventory. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. When you pay in advance, meaning long before you receive the merchandise, not just 1 or 2 days, let's say 2 or 3 weeks, the quantity of inventory should not change until the items are actually received. You must have an account to track what is paid for and what you expect to receive in the future regarding your prepaid inventory. This account increases when you prepay for inventory and decreases when you actually receive the inventory. And again, if you're going to receive the inventory just 2 or 3 days after paying, you can ignore this video and just record it the way we did in earlier videos. But if you're going to receive your inventory several weeks after paying, you really need to do the procedures that will be shown here. The prepaid inventory account should be a current asset. And that's because it represents what you will receive in the future, like accounts receivable. Now, you have to understand that in QuickBooks Online, if QuickBooks Online does not have a feature for everything you need to do, you have to do something called a workaround. No accounting program comes with a feature to track prepaid inventory. A workaround means that you will use QuickBooks Online slightly differently from the normal way in order to properly account for this issue, the lack of prepaid inventory feature. So what do you do? Well, this method is called the Mark Smolin method because I'm Mark Smolin and I invented this method, and it has worked perfectly for my clients that use inventory starting from the late 90s. Prepaid inventory, when you put it on the list, must be a bank type of account. And when you pay from the normal bank account and put prepaid inventory in the category field. When you receive the inventory that was paid for, you use the expense window and put the prepaid inventory account in the top field and choose the items that you receive at the bottom of the window. Then you will make extensive use of the description field, and that will help you track the details of prepaid inventory. Then you can open the account from the trial balance to see the description of each transaction. So here's a set of 5 things that you do under the Mark Smolin method that will guarantee that you have total control of your prepaid inventory and your books and records will be correct at any given moment. So before our example, let's go ahead and create the prepaid inventory account in the chart of accounts. You click in the left panel where it says Accounting, Chart of Accounts. Then you go to the top right and click New. Now, it's a bank type of account, and again, the detail type really doesn't matter. You can put checking, money market, savings, trust account. It doesn't matter. All that matters is the name is and this account will show up on your trial balance and balance sheet, and it will represent the amount that you paid for inventory that you expect to receive in the future. Click Save and Close, and now you're all set up. Now, let's do our example transactions. Let's imagine on January 19th, we paid Addie's Orchard in advance for 200 apples to be received in the future, and we paid it with check number 62. Well, it's very simple. You go to the top left and click New and come over and write check. Now, this is check number 62 whatever. You paid Addie's Orchard. Now, even though you have a purchase order and a bill, ignore it. Don't worry about it. This prepaid inventory is not related to these two. So you can just ignore that. You can just scroll to the right for the rest of the stuff. So the date, I believe, was January 19th. So put the date that you actually paid. Now, you will not put the items. On the day that you prepay for the inventory, you do not put the detail of the items, because the quantity in your records should not change, because you do not yet have them available for sale. Instead, click Category, and the account that you choose in the category should be Prepaid Inventory. And it should be up here. Here it is, Prepaid Inventory. There you go. And the money amount that you paid, well, you'll have to calculate it yourself, because you're not using the quantity feature because you don't have it available. So 200 apples, and we usually pay $10 each. So in America, 200 times 10 would mean that we're writing a check for $2,000. And again, you would have to calculate it yourself, because we're not yet using the quantity, and we're not yet using the quantity because they're not yet available for sale. You can hide this by pushing this little thing, by the way. Okay, so now you have the $2,000 check, and then when you click Save and Close, now when you click Reports, Trial Balance, your trial balance is correct. Your trial balance has a receivable account, an asset with the value that you will receive in the future for $2,000. And if you made a balance sheet and reported your numbers right now, that would be a correct number. Now, in order to help you track the details, we are going to create a custom report from this prepaid inventory. Let's double-click the number and notice that you have all of this as your detail for your prepaid inventory. I have to scroll left and right because you know what I could do? I could expand this a bit here so that you can see, because the most important thing is the memo description. And if we double click, we notice that you can put in the description the details of what you are purchasing. You can put 200 apples, check number 62 on the date 1/19, so that you know when you look at the report, you can see the details of what you were paying for. And let's click Save and Close. So notice the description will tell you the details of each transaction that's in the prepaid inventory account. And now that the account looks the way we want it to look, we will click Save Customization, and instead of calling Transaction Report, we will instead call it Prepaid Inventory Details. And then click Save. Now if you click Reports, you can click Prepaid Inventory Details, and you will see each transaction that affected your prepaid inventory account, and the memo will explain the transactions so you know exactly what you're expecting in the future. Now let's imagine on January 20th, you actually received the apples from Addie that were paid for on January 19th. Now, here's where the workaround comes in. You click New from the top left, and then you choose Expense. Now, here's where the workaround comes in. You don't actually have an expense. In fact, there really is no payee. All you have to do is make sure that you pay from the prepaid inventory account, because the balance is $2,000 of what you're expecting, and now you use the items instead of the category and you choose apples. And we are assuming we received all of the apples. We are assuming we received 200. You type in how many you received. So you see the prepaid inventory account is going down because now we received them, and the actual inventory account is going up in addition to the quantity that is now available for sale. And of course, the day that we physically received them and made them available for sale in our inventory is January 20th. Click Save and Close, and if we click Reports, Trial Balance, you will see that the results are exactly as they should be. Prepaid inventory goes down to 0 because we don't have any prepaid inventory anymore. Instead, we have more of this inventory asset. And if you double click and scroll down to the bottom, you can see the January 20 entry increases the inventory asset by $2,000. And then if you click Reports, Inventory Valuation Detail, you can see that the January 20th entry increases the quantity of apples by 200, and that's exactly what is supposed to happen. So this workaround with these procedures will work perfectly. The only other thing you have to remember, let's double click and open it up. Let's remember to add a description from you have to put those details in there and click Save and Close. Why do you have to put the details in the description of every transaction that involves prepaid inventory? That's because when you click Reports and you look at your prepaid inventory details, you want to see the description of what happened. So I don't know why it didn't show up there. Let's double click. Maybe there's another description field down here, but anyway, put in the description so that you can open it up and you can see all the details so that you can know why prepaid inventory changed the way it did, and that will help you somewhat track the quantity of what you're expecting to receive. Now, let's imagine on January 21st, we paid Sam's Farm in advance for 150 bananas with check number 63. Again, you will have to calculate the money amounts yourself. I happen to know that 150 bananas paid $20 each means that check number 63 to Sam will be $3,000. So let's click New, check, January 21st to Sam's Farm, and we can just close this because this bill is irrelevant. And this time we're using category, not item details, and we're going to put prepaid inventory. Here it is. Good. And we're going to put 3,000 that we calculate ourselves, and in the description field, 150 bananas from 121, check number 63. You can put whatever details help you when you reopen it. Now when you click Save and Close, you can click Reports, trial balance, and you will see that $3,000 is the amount of inventory, the money amount that we paid for inventory that we expect in the future that we will receive. Now here's where it gets interesting. January 22nd, let's say we received only 100 from the bananas from Sam that was paid from check number 63. Well, we're going to do the same procedure. We click New, Expense, and the day we received those 100 bananas was January 22nd. So we will put January 22nd. There is no payee because we're not paying anybody. And we're going to put only, well, this is bananas, but we're only going to put the quantity of what was physically received, because on January 22nd we only increased the items that are available for sale by 100, because that's what we received. But you can put the details in the description. From 1/21, check 63, only 150 pending. Put those details of the quantity in the description field so that your prepaid account will be clear. Now, the account that we're paying from, good. The account that we're paying from is prepaid inventory. Because we already paid for these, we're simply lowering prepaid inventory for the amount we physically received. When we click Save and Close, the trial balance is correct. Now we only expect to receive in the future $1,000 worth of merchandise that we paid $1,000 for. And the inventory asset increased. See the very last transaction? The inventory asset increased, and you can see the details. It increased by $2,000, and then you can see, you're supposed to be able to make this column wider so that you can see all the details of what happened with your prepaid inventory. And you can click Reports, and you can click Inventory Valuation Detail and see that from the event recorded on January 22nd, you increased by 100, a quantity of 100, how many bananas you have that you paid $20 each for. And lastly, you can go down to the prepaid inventory details, and you can see on January 22nd, prepaid inventory decreased by 2,000. And I regret that it's not showing the memo description, but you could just double click and you could see why it increased only by 2,000, and that you have 50 pending from check number 63 that you expect to receive in the future. And lastly, let's consider the January 23rd refund from Sam for the remaining items that we did not yet receive. Let's imagine on January 23rd, Sam gave us check number 1234 for the other 50 bananas that we paid for that we did not yet receive. Well, in this case, we'll know the money amount because it'll be written on the check, and we will know the reason. But I happen to know that 50 bananas at $20 each means he returned $1,000 to us, and that we deposited that $1,000 check on January 23rd. Now, if we deposit the refund check, it means the prepaid inventory is no longer in existence because we are no longer expecting to receive $1,000 in prepaid inventory. If we click Reports, Trial Balance, it says we expect to receive $1,000 worth of inventory, or $1,000 of inventory that we paid $1,000 for, we're expecting to receive in the future. Instead, he refunded it to us. So we simply make a deposit and we choose the prepaid inventory account. Click New, and we click Bank Deposit. Now, The account that we are depositing to is our normal operating account. And we received this from Sam's Farm, and the account that is being affected by this deposit is in fact our prepaid inventory account. Here it is, prepaid inventory. Make extensive use of the description field whatever the information you want to put, and then just put the amount of the actual check. So on the day that and we received that on January 23rd. So on the day that our bank account goes up by the refund check of $1,000 from Sam, prepaid inventory goes down because we no longer have that asset that we will receive in the future. And if you click Save and Close, you see that the bank account is $1,000 less negative in our little story, but prepaid inventory went down to zero the way it should be. And if we open the reports, we can look at the prepaid inventory details, and we can see that that deposit and the explanation, you can stretch the memo a little bit wider if you want. You can memorize it after you stretch the memo wider, so you can see the details of the quantity that you got refunded for and why you no longer have prepaid inventory. Don't forget, folks, this Mark Smolin method of prepaid inventory will work with any accounting program that does not have a separate feature for accounting for prepaid inventory.